Thanks, Maddie. Good afternoon, everyone. Today we are here to talk about international payments. We'll be talking about the payment file formats and the different aspect of payments in the treasury space. A quick introduction about myself. My name is Adarsh. I'm a senior treasury consultant with Elite's Kariba practice. I have over 88 plus years of experience in implementing payment and cash management solutions in the treasury space for corporates such as Amazon and Shell. Here is a quick look at the agenda about what we'll be covering today. So we'll be setting the stage with the global context of why international payments are relevant right now. We'll look at the different payment formats and workflows. We'll dive into the real-time payments. We'll compare Swift MT versus ISO 2022 payment standards, and we'll wrap up the discussion talking about reconciliation. And we'll open the floor for questions. So let's jump right in. I'd like to briefly share a bit about Elir and our experience in the treasury and payment space. So Elir was founded in 2005 and we have over 20 plus years of experience in the treasury and technology space. We have supported 475 plus clients, including 40 plus of them, 40 plus of Fortune 500 companies. We have delivered 300 plus, implementations for our clients. And our focus always has been helping clients to unlock the full value of their software through strategic guidance and efficient implementations. We've also been recognized as trusted advisors, and we are continuously and closely partnering with Oracle, Kariba, and FIS as well. Well, we got a start in Treasury. Elir has since expanded to 6 key centers of excellence. We have the Oracle Cloud Services, PeopleSoft, Advisory Services, Managed Services, and the Treasury as well. So Elir has been a recognized leader in the Treasury and FP&A space. We have multiple successful Treasury projects and TMS implementations across industries. We are also a Swift ready partner that brings proven expertise in both advisory and solution design. Our treasury practices span the leading across the platforms like Oracle Cloud, FIS, and Kariba. And together with all this, this sort of makes us a one-stop partner for treasury transformation journey. From strategy to implementation to ongoing support, we're able to help clients through this journey. So these are just a few of our valued clients. We are very proud of the relationships we have built with our clients over the years and the trust they continue to place with us. All right, so let's dive into the topic of discussion today, international payments. So international payments are not a niche process anymore. They move the global economy, right? Every organization in this meeting today is either already making or receiving cross-border payments, and the volume is growing exponential, right? If I look at the numbers, it is estimated that over 150 plus trillion dollars of cross-border payments are supposed to happen this year. And this figure continues to climb. For corporates, that means that even small inefficiencies in the existing processes could lead to a lot of extra fees or delays, or in fact, it could have a relationship impact in terms of business as well. And in addition to that, there has been a growing pressure from the compliance side as well. Regulators are increasingly asking the financial institutions and the corporates to ensure that the payments are expected to be, following all the regulations and standards. The data is supposed to be clean, and we need to ensure that the compliance has been maintained. And any inefficiencies in the existing payments can basically cost a lot for the corporates, and it is also not good in terms of the risk. So payment errors can directly impact relationships. It can break customer trust and also can cause issues with the working capital. So the question is not whether international payments matter. It is more about how we can handle them more efficiently, more securely. And that is where standards like ISO 2022 and ERP TMS comes into play. And we're going to talk about all this in the coming slides. Okay, so let's understand how corporates are moving money today. So the oldest way of doing things was, using the correspondent banking, where there were multiple parties in play who were, sort of going through the payment instruction files and ensuring that the payment was successful. It had its own problems. It was reliable, had global reach, but it was also slow and costly and lacked transparencies. And a single transaction was expensive because you had your debtor bank, you had your beneficiary bank, and then you had the intermediary bank clearing house, and all this added multiple touch points. It added time in processing as well as fees. After that, we had something called Swift Empty Network, and the empty network has been the backbone of the international payment for decades now. It's truly global and standardized in terms of messaging, but but the empty format is more on the legacy side now because it has its own set of restrictions in terms of structured data that can be sent, and it also limits automation opportunities, and even the reconciliation for such transactions has always been a challenge lately. And apart from that, you also have corporates building their own fintech rails with the banks. So there are corporates out there who have their own systems, and they are capable of connecting with the bank system. But then it requires a lot of engineering effort to maintain these systems and the file formats. And we also have the Swift XML, ISO 2022, which is the upcoming trend in terms of international payment standards. So corporates basically face a real challenge in terms of managing all the systems, managing multiple payment types, and there is no single way to do that efficiently. And this is where I think they are looking for a integration hub, something like a treasury management system. Um, that can sort of standardize and connect across systems and with the banks and sort of streamline the existing payment processes. So let's talk about different type of payment formats and what type of payments are we actually dealing with as of today. So before we go into payment types, let's discuss about a payment format and what it actually means. So a payment format specifies how payment data should be structured and presented to ensure accurate and efficient processing by banks and financial institutions. And this matters because it sort of enables direct bank connectivity. It sort of enables automation of payment processing and timely reporting. And uh, the challenge with this is each bank has its own format, and with number of payment types, if you consider, it simply makes the ecosystem very complex. So using a TMS sort of can help you streamline the integration with these banks. It can help you streamline how to transmit this payment instruction data to the banking partners. So on a cloud-based TMS, the ability to receive feedback and implement those changes and sort of helps to test those payment formats is exponential faster. So it's the onboarding time for a bank is very less by using a TMS compared to your traditional conventional methods. So looking at the different payment methods we have out there, so yeah, the credit and the debit cards is the most commonly used consumer kind of payment method, and it's used for business purchases as well. It's has global acceptance. There is very few risk, but often this comes with additional merchant processing charges. And then you have the ACH transfer. So this has been widely used across corporates in US and especially for domestic payments. So you have the automated clearing house in US, which is used for bank-to-bank network. And most common use case for ACH transfer you will see is your regular payments like salaries, utilities, subscription fees, and they have their own settlement type. It's pretty slow in terms of settlement because it takes somewhere between 1 to 3 days. Then you have your wire transfers. So wire transfers are nothing but your bank wires, Fed wire or Swift wire, and these are used to move funds domestic as well as internationally. And it is a real-time way of transferring money, and the settlement could be anywhere on the same day, or it also could take a couple of days. It's often expensive when you compare it with ACH. So wire transfer, depending upon where you're sending the money, could cost up to like $10 to $15 per transaction as well. And then we have checks. It's still very common, used for B2B use cases, but it's been really slow because the effort involved in issuing the check, printing, and mailing it to the beneficiary. So settlement can take from a few days to a couple of weeks as well. And because they require manual processing and real-time settlement, wire fees, the checks are sort of uh, not so efficient in terms of day-to-day business operations. Obviously, cash, we don't no longer use cash, so physical currency payments, they were in use at one point of time, but not anymore. We have the digital wallets. So the digital wallets are mostly the online and the mobile wallets because they store payment credentials for e-commerce and P2P transfers, and they're widely in use. So basically, it requires the customer and the institution to be on the network. And it is estimated that almost 62% of the US companies currently use wallets for the customers because it helps them, especially for online sales. And then we have the real-time payments. So it could be RTP, it could be FedNow or SEPA Instant in Europe. It's available 24/7. The transaction settles in a matter of seconds, and this is growing globally. We're going to talk about real-time payments in the next few in some time. Yeah. All right. So let's talk about how having a how having a TMS in the picture of the your systems landscape is going to help in terms of consolidation of the whole payment processes, right? So we have often come across clients, from medium to large level corporates who are using multiple ERP systems, and each of these ERP systems have their own use cases. For example, you have a ERP for payroll, you have an ERP for managing your AP invoices. There is one for uh, billing, and everyone is sort of integrating with the bank separately and initiating and processing payments. It becomes very difficult to have a consolidated view of what your liquidity is, and this is where there is a lot of effort going on by having different teams out there, and the processes are so fragmented. There is no centralized visibility on what is happening in terms of uh, the cash. So in this case, and in such scenarios, what we recommend to our clients is to use a TMS solution. And for example, if you consider Kariba as one of the TMS, so what Kariba is capable of is it's able to connect to the ERPs and able to import one single file from the ERP, which could contain multiple types of payments. But then Kariba can sort of import that file, understand, extract the payment details of it, translate it into the format which is understood by the banks, and then transmit the same. So in terms of capabilities, what you're looking at is the Kariba sort of maintains 500 plus integration options with the banks out there, and it has its own format library of 40,000 plus different types of payments with different banks, right? And in addition to that, if you are focusing on the payment workflow, it also provides you capabilities of approving your payments. There is fraud screening. You have the audit capabilities as well. So when a client integrates uses a TMS in their payment landscape, what we have seen is that it has an 85% improvement in terms of onboarding of new bank accounts and launching new entities in the market, because now the ERPs, it's not just only ERP, but we have a TMS that is capable of sort of integrating it with banks in a faster rate. We have seen significant dollar savings in terms of annual IT and bank costs, because now your number of integrations with the bank have reduced. The amount of hours that go into development efforts for building each of this file format has been reduced. And if we talk about reconciliation, we have seen 97% improvement in the efficiency, because all this is automated now. The banks are capable of sending acknowledgements for all those payment transactions. They're capable of sending bank statements back to the TMS, so that way, the business teams have real-time visibility on their cash, and they're able to reconcile their cash flows against those against the data what they see in the bank statement. So by consolidating payment workflows through a system like Kariba or any other TMS, corporates move from a fragmented, high-cost process to a centralized or standardized model. This also means, a faster bank onboarding, lower operational cost, and for treasury team, it shifts their focus from managing complexity to, managing cash strategically. So let's look at some of the advantages of optimizing a TMS in this process. So basically, using a TMS sort of provides you an opportunity to route your payment files, and ERP generates the bank ready file, and the TMS securely routes it to the correct bank. Since the integration itself is managed by the TMS, when it comes to services like cross-border payments, the TMS is capable of handling, complex international payment file logic. So, for example, your bank in Europe might require you to enter some, input some information like tax details or further credit or intermediary bank details or anything that is very specific to that region or bank. So that is something that can be managed by the TMS. Also, it provides an end-to-end tracking facility, so you no longer have to go into your internet banking portal and check what happened to the transaction. So the bank will be able to send the acknowledgement file back to the TMS, and you can have a real-time view of what your payment status of the payment is, whether it is accepted, whether it's rejected. You also have a payment dashboard. So let's say you do want to go and check how many payments you did in the last 1 month or 1 year. You have that payment dashboard view available in the TMS itself, which makes it easier for you to maintain your records. Now imagine what would happen if we are not using a TMS, and how corporates would approach in making payments with the bank. So in this case, what would happen is you have your own ERP or a backend system that would connect with the bank, and then you have your engineering team who is responsible of building those integrations. They also need to work with the bank's technical implementation team to develop the file format. And considering each bank has its own file format, different requirements for the payment. So there's a significant development effort that goes into building those file format libraries. And if you look at the diagram here, the number of iterations that it takes for the development team to sort of build the file format, test it extensively, it's a significant effort. And if you're looking at an end-to-end cycle of building a file format and testing one type of payment with the bank, it could take anywhere between 6 to 8 months if this is a fresh implementation. And that's a lot of time when you compare it with a TMS in terms of onboarding. And there is also a risk of missing out on key details during the build and testing. And this is where actually the capability of TMS comes in, because the TMS is capable of connecting with the banks. They have their own set of file format libraries, so it's more cost efficient in terms of maintaining this, and there is more ROI in the end. So this is an overview of one of the TMS implementations we did for our clients. And with many of our clients, we either utilize API or host to host to interface with ERPs. So if you look at this integration, so the users don't have to sort of move out of the, once the integration between the ERP and the TMS is done using API. For example, let's say if an AP user has to do a payment, they don't have to step out of the ERP, right? I mean, they can initiate the payment transfer in the ERP, and because of the existing integration options, the file would be sent from ERP to TMS, and the approval of the file payment itself can be managed within the ERP, so that you don't have to do another level of approval within the TMS. So what TMS does is it basically consumes the file from the ERP, transforms it in the format that is required by the bank, and then using the same API connection, it sends the file to the bank for real-time processing. And in addition to the processing and formatting of the files, there is also a standardized payment control option available within the TMS. So for example, let's say you want to have some sort of fraud detection in place. You just want to make sure that your payments are, secure, and they are not sort of included in the sanctions list. So all that check can be done within the TMS itself. It also provides audit trails in case you want to maintain an audit record. Maddie, I think we have a poll question here. So
yes, you should see on your screen, how many payment types does your organization accept or process? 1 to 5, 6 to 10, or 10 plus? Give people a minute to get their answers in. And as a reminder, you'll be entered to win a Starbucks gift card by participating in the polls today. Looks like still got a couple of responses coming in here, but the majority say 1 to 5 payment types, with that being 56% of respondents, and then 6 to 10 being 30%, and 10 plus only 11% of those on the call.
thanks, Maddie. So yeah, let's talk about what you're seeing. So 1 to 5 payment types. So that basically means that you have a very few use cases in terms of the different kind of payments you're making. But then it could also be possible that you have a high volume of payments for each of these payment types. So you might be just making domestic payments, but then you might be making 15 to 20,000 domestic payments a day. So if you have a TMS, what you can do is you can batch those payments, and that would basically help you reduction of your payment cost when you're sending it to bank. Because as far as I'm aware, the banks charge you in terms of the number of files you send it to their server. So having the option of batching your payments certainly reduces the cost for you. And let's say if you're somewhere between 5 to 10 payment types, then in this case the TMS can be useful because it can sort of help you maintain your payment logic, and it can integrate with different kind of banks, so that's helpful as well. And if you're dealing anywhere between 11 more than that payment types, then I think TMS would be highly useful here for seamless execution of payments. And you also have an option of sort of manually creating payments within a TMS and utilize pre-existing templates for recurring payments. But all in all, if you think about it, like having a TMS as an option to initiate payments reduces your team's dependency on internet banking portals, because we have seen how difficult it is for the teams to maintain their access on those banking portals. You have separate logins and passwords, and it's a hassle. And honestly, having a TMS eliminates your need to go into your banking portal for initiating payments. So now let's move on to the workflow that really makes all of this possible. It's the bridge between the ERP and the TMS. So most corporates, they run their payables and receivables through an ERP, but ERPs by design were not built to handle the complexity of integrating with multiple banks and deal with multiple payment file formats. So that's where actually a TMS comes in. So it's in fact, it acts as a central hub, which basically, takes one standardized output from ERP and convert into whatever format each bank requires. So this diagram, it illustrates how Kariba's banking platform connects with ERP systems. So on the left, you can see that we have pre-built ERP connectors from systems like Oracle, SAP. So the user experience remains the same because they wouldn't know there's not going to be much change in terms of how they process payments in the ERP. And these ERP APIs directly connect to the Kariba's banking platform where all the transformation happens. And you also have your BI analytics module out within there to see, have a record of all transactions that has happened. From there, Kariba connects to the banks to the API. It centralizes the payments and the reporting. As a result, what you have is a very streamlined workflow, which is pretty automated, and it reduces the system design, and it's easier to maintain, right? Because this landscape simplifies everything instead of having 10 different ERPs connecting to 10 different banks, and it becomes very difficult to maintain all those integrations and payment file formats. So we've been talking about integrations and different kind of payment file formats. So let's dive a bit more deeper into what exactly that looks like. So when I talk about payment mapping, so payment mapping generally ensures that the payment instructions that is generated by the TMS is accurately formatted, and it follows the standard expected by the bank. So generally what happens is, like, let's say a ERP which is capable of generating different transactions. It could be AP, it could be billing, invoices, or tax payments. So ERP generates one single file which has all these different kind of transactions. You have different bank accounts from which the payments are initiated, but then the ERP's role is to just generate one single file, and it sends it to the TMS where all the transformation happens. And if I go a bit detail into how that is being done in a TMS, is basically we have something called a data mapping within the TMS, which basically defines how the payment details are extracted from the ERP payment file. And then once the payment details are extracted, the next step would be the format transformation. So basically, what Kariba or a TMS would do is it will look at those payment details. It will try to identify what are the different type of transactions. So it could be an ACH payment, it could be a domestic wire, uh, and it could find out where your beneficiary data bank is located. And based on that payment details, what it does is it basically transforms the file into the expected format, and it also then maps it to the corresponding payment file fields, right? And in addition to that, you have an option of customizable templates. So if you're sort of doing a payment quite often, or you can sort of predefine your templates and save it. And then once the transformation happens, you have the bank communications that are in place, which basically helps you in batching those payment files and then sending it to the bank. So why is this important is because without this pre-configured customization option within a TMS, it would be very difficult to sort of do this manually, because the ERP does not produce the proper file format that is required for all the banks, right? It could produce maybe one single generic XML file or one CSV file, which could be compatible one or two banks. But if you're dealing with multiple countries, then it becomes very difficult to configure all that within an ERP, and that's where TMS comes into the picture. So the next slide, this slide basically shows you an example of how it is implemented in real life. So for example, if you look at this file, this is the output file generated from an ERP. It could be SAP or Oracle. And if you see, you have a header record, which basically lists out the different fields that are required in a payment. You have the second record, the transaction record, where you see the bank account details, the amount, transaction date with a footer record. Now, when this file is uploaded or submitted to the TMS, what TMS does is it extracts the payment details in those CSV file, and it then transforms it into the XML file based on the predefined, or the custom logic configured in there. So basically, this is the output file you're going to see which is eventually transmitted to the bank for payment processing. So yeah, this is further going into the details of how the workflow would look like. And in addition to all the transformation and formatting that happens, uh, there is a more option in terms of let's say when the file goes to the bank processes the file and it sends you an acknowledgement back. But what you also see is that the TMS has an option to sort of receive bank statements from bank. So once the bank receives the payment, let's say the statement file, it could be a BAI or a CAMT statement, comes back to the ERP or the TMS, and it could be both, depending on how you want to configure this. And you will see the list of transactions that have been reconciled, that have been processed, and the same gets reconciled with your cash flows, right? Be it in ERP or in TMS. So that way you have a real-time view of what actually is happening during the day. So for example, if on a current given day you process 100 transactions, you receive your intraday statement from the bank in return, which shows all those transactions. And that way, you know what was the opening balance on your account, how many transactions you have processed, and what is the current liquidity on those accounts, right? So any extra information you wish to receive from the TMS to ERP, that can also be integrated via SFTP connections or APIs. So there is a lot of flexibility to do customization, and you also have options of pushing reports and any other additional details you want to send. And in addition to the technical capabilities, if you are talking about from functional, or rather from the process perspective, right? So you can also have approvals in place, both in ERP as well as TMS. So it could be possible that if a payment is initiated out of TMS, you would want to have a different level of approvals placed in there. You could want that payment to be signed by two authorizers, whereas if it is initiated from ERP, you would want to have only one authorizer in place. You would also perhaps want that the file generated from the ERP would, uh, to go into TMS, and then it should be logged, and it should not be modified. So that is possible as well. And so there is a flexibility in terms of what kind of workflow you want to choose. And apart from that, you also have an option of intelligent routing. So basically, your ERP can produce one file for multiple banks with a different kind of file formats. The TMS is smart enough to sort of interpret those payment details and decide which set of instructions should be sent to which bank via which connection, right? So this basically sort of helps you streamline the processes. So far, we have looked into how ERP and TMS systems connect through APIs to streamline the payment workflows and improve visibility. But connectivity is just one part of the story, right? The real transformation comes when we combine this integration with speed. And one such example is real-time payments, because real-time payments is all about speed. So these are basically electronic payments that clear and settle within a matter of seconds instead of hours or days. The speciality is it's available 24/7, right? Because when you are looking at your typical corporate payments, you have Monday to Friday business hours. You have cutoffs from same day processing, because you know that, okay, any transaction I make after 4 p.m. is not going to be processed on the same day. But when it comes to real-time payments, there are no such restrictions. At the same time, these payments are also data rich. So like, they can include all the details which is required from the reconciliation point of view. So in US, if I think there are two networks that are providing these services, you have the FedNow real-time payment service that was launched in 2023. You also have the clearinghouse RTP networks. So As of today, I think real-time payments are active in 70 plus countries, and having a visibility into this kind of processing sort of gives you a better understanding of where your liquidity is, and it's pretty useful in a lot of business use cases. Let's say you want to do an urgent payment. I think real-time payment is the way to go. In terms of how the payment flow looks like, it's no different than any other payment types, right? So you have an initiation phase where the user can initiate an instant payment request. It can be either using a TMS, or it can be, using a banking portal, or the same could come from an ERP file as well. You can place your authorization wherever you want this to happen. And then you have the transmission phase where the payment message gets transmitted to the beneficiary's bank in real time. And the clearing is also pretty instant because the beneficiary bank processes the payment message in a matter of seconds, right? And the settlement also happens at the same time. So it's pretty instant. It's pretty useful. Now, looking at some of the use cases, I think the best example is the contingent payment. So you might come across scenarios where you have to sort of pay a supplier, or you want to do a ad hoc salary payment to an employee on a very urgent basis. So I think this is where it comes into play. It also sort of helps you with low cost payment options, because company can achieve the immediacy of a wire transfer but at a fraction of a cost. Although real-time payments sort of improve cash visibility, and it strengthens your liquidity management as well. And it also gives you an option where, let's say you're paying someone for the first time, right, and you don't know if the vendor's bank account is right. Real-time payment is the best way to sort of experiment that. You make a $1 payment and you check with your vendor. If they receive the amount immediately, you know that the bank details are correct. If not, uh, you know you know what to get the how to get the correct bank details. And this is really helpful because in otherwise of a normal scenario, it might take a few days to week for sometimes the vendor to confirm whether they have received the credit or not. So these ways, real-time payments really help you that way. So let's switch gears. We have talked about real-time payments. So let's look into what's trending right now is your Swift ISO 2022 migration. So this is all about standardization of payment file formats, and let's look at how the shift from Swift empty file format to ISO file formats impacts your payment ecosystem. We have another poll question.
So you should see on your screen and in the chat the second poll. Is your organization currently processing payments with Swift MT, ISO 222, or both? Give folks another couple seconds to get their answers in. Looks like the majority right now have both, with about 49-50%, and then just Swift MT is following that with 31%.
Interesting. So for people who said both, I think what we're looking at is the hybrid mode. So most of the corporates are in this stage right now where they have both the MT setup as well as ISO 2022. And we have also seen that they are in the phase of migration, which is good. We have made progress. But those who are only on the Swift MT format, I think we need to sort of come up with a plan to migrate all those to the latest format. And but yeah, thanks for sharing. The results really highlight the mix of standards and use, which we see across organizations today. Okay, so let's do a quick comparison of what the two file formats have to offer. So basically, the Swift MT is a legacy format, has been around for decades now. It's a text-based file and it has very restricted format in terms of field lengths, and it has limited ability in terms of carrying your transmitting payment details. So when I talk about limited ability, so for example, your payment instruction file in an MT 101 or a MT 100 could allow you only maybe up to 20 characters of address field, whereas in your ISO 2022, which is your latest format, on the other hand, is an XML based and data rich design. So it is sort of allows you to include all that additional details without any risk of truncation or data being. So it sort of helps you meet the modern requirements. It's also the sort of standard which banks are enforcing on the clients today, because it helps them to sort of maintain the standardized file format. Because what we see is with Swift empty file formats, each bank has their own customized set of fields. So, for example, if your particular line item in an empty file stands for a field like for address, the same line item could mean something else for a different bank in a different geography. Whereas when you use the ISO 2022 file, like for example, Pain version 1 or Pain version 3 file, you know that if you're sending an XML or if you're sending address in the XML field address, it means the same for all the banks, right? So what I meant to see here is your file format is standard across the banks, and it also sort of it's easier to maintain that way. So with empty, much of the information is sort of stuffed into the free text fields, and the structured sort of whereas in ISO 202 it's more structured. So instead of one field with a name, like I mentioned before, so ISO 2022 has a lot of options in terms of the data you want to send. You can send the invoice details, you can send the remittance details. If there are a specific kind of payment like tax, you have separate designated fields to include those information as well. In terms of talking about processing rates, because empty formats rely so much on the free text data, they are being interpreted differently across banks. Whereas in terms of ISO, like I mentioned before, it improves your straight through processing rate because payments flow end to end, uh, without any manual intervention. And in terms of, yeah, we discussed about the regional interpretation versus global consistency. So like I mentioned before, the empty file format could be interpreted differently across banks and regions, whereas ISO 2022 has a high level of standardization that way. So let's talk about some of the challenges which corporates might come across while migrating from the Swift empty to the new ISO standard. So one of the major point is the mapping complexity, right? Because migration is not simply just a left and shift here, because empty free text fields don't really map directly with the ISO structure tags. There is no one-to-one mapping most of the times. And what we have seen is the corporates mostly end up uh, doing a lot of data cleanse and enriching of the data just to ensure that all the data is correctly read into the new file format. In fact, there are also issues when it comes to coordinating across multiple stakeholders, because it could be possible that you have an ERP in place which is responsible for generating a file, you have a TMS in play that is going to sort of transform these files, and then you need to work with the banks, you need to work with the vendors for the testing. So the migration journey does come with a bit of a timeline challenge, because you have to sort of align with all of your stakeholders. Data quality is an issue because you come across instances where your static data has not been up to date. So, for example, in the legacy file format, perhaps you would have been doing payments that would not require you to enter a corporate tax ID or any sort of identifiers. But now the expectation on the ISO file format is that you need to enter these mandatory details. So that's a challenge where you need to go back and look into your core static data. You need to make sure they are up to date. Also, the bank readiness is a challenge because you often see in each bank has a different level of timelines. So that makes it difficult for corporates to sort of go on a big bang approach of rolling out this migration all at once. You will have to work individually with all the banking partners, and you might have different timelines in terms of going live with the ISO file format. On the tech side, we have the ERP and the TMS systems, so they also need to be upgraded to ensure they support the XML file formats. The integration needs to happen, and also there is an operational risk in places where you're maintaining both the empty file format as well as the ISO file format. So these were some of the challenges we looked in terms of migrations. We also talked about how payments happen. Now let's focus on what happens after they have been sent. So for many corporations right now, the reconciliation is still a heavily manual process. So teams are logging into the bank portals, they're looking at the daily bank statements, trying to locate the transactions, and sometimes when they are missing, they end up chasing the banking partners to understand what happened to the payment. So this isn't just time consuming, it also delays visibility. into your day-to-day cash positions. It also increases the risk of errors and slows down your, processes, activities like month-end close and so on. So utilizing an ERP or TMS to, automate your reconciliation process is a very helpful way of, streamlining things, because TMS has the capability of ingesting bank statements. So it can ingest BAF files, or it can ingest the CAMP files, and all this happens automatically via secure integrations like API or host to host. So this basically sort of enables you to perform your cash reconciliation. So you can match your bank transaction data against the cash flows that you have stored. It also sort of helps you with the other reconciliations that you have in place. So this efficiency sort of improves through instant reporting of unmatched items requiring attention. And this also sort of helps you utilize the enhancements for data specification within each financial institution. So all in all, having a TMS to perform your reconciliation can really increase the output of your team. So if I look at this diagram, this basically shows the manual process of doing reconciliation, which we have seen clients doing. So first, if you see here, we sort of log into the bank portal, gather the data in terms of the transactions that has happened. We decide, at a certain time of day, you end up basically getting all the details put together. You check your balances, and then you manually calculate, what has been the outflows or the inflows so far, and what should be the, final outcome of the cash position. And all this is manual, and there is also a risk of manual error here, because it could be possible that while you're doing this manually, you might miss a few transactions, or you might oversee something. So this is where your TMS sort of comes into picture, and it has these automated reports where it can sort of help you identify those variances. So what you're looking in the screen right now is one such variation report, which TMS Kariba generates. So what Kariba does is it ingests the bank statements and it calculates the bank statement balance. At the same time, we have the cash flows within the Kariba, which Kariba is also sort of calculating its own balance. And when the bank statement is ingested, what Kariba does is it does a quick variance check just to make sure that the balance calculated as per the statement is matching with what is there in Kariba. So this sort of gives you an assurance that your transactions are getting reconciled and you're not missing anything. And let's say if you do come across a difference in the bank ledger versus your cash ledger balance, then what you can do is immediately get to know, for which account you're facing this issue, and and the investigation is much efficient and smoother in such scenarios. It's easier to work with your banking partners to identify those problematic transactions. So again, summarizing the discussion around the benefits, basically reduced manual effort, right? Having this reconciliation, automated reconciliation in place increases your efficiency in terms of forecasting. It gives you a real-time view of your cash position, helps you especially when you're doing your month-end close and other activities. And all in all, this gives more times to the treasury analyst and their team to, focus their free time on something more productive. So yeah, we are coming towards the end of the session. So we'd just like to summarize what we have discussed so far today. So a lot of executors thinks like, okay, we have an ERP which is capable of, connecting with the banks and doing payments. So why do I need a TMS anymore? The key here is that a TMS is not going to replace an ERP. It is rather going to complement the ERP. So ERP is not specialized for treasury functions, but TMS is. And for payments, a TMS streamlines the workflow, it automates your formatting, and it connects directly with the bank, eliminating the need for any manual interventions or having access to multiple bank portals. And TMS can significantly increase your resource availability. It can increase the productivity of your team by automating routine tasks such as reconciliations, payment approvals, file transformations. It also reduces the human error. For example, instead of manually reconciling transactions line by line, the TMS automatically matches them against the bank transactions. Uh, that one of the other key advantage of having a TMS is the cash forecasting benefit, because I know ERP is not capable of doing that at the moment. I mean, even if it does, it's not very efficient and advanced like how a TMS can do. So this allows treasury teams to sort of, get a real-time view of their balances. It helps them to reduce, idle cash on their accounts, and gives them the ability to decide how to invest their surplus cash or, pay their debts more efficiently. So talking about the ISO 2022 migration, so yeah, it's the adoption of this, the latest file format is not just a compliance deadline. If you think from Swift perspective, it's more like an opportunity here for the corporates to modernize because ISO provides a richer structured data. It enables innovation when you're talking about APIs or host-to-host technologies. It supports multiple different kind of file formats, and it's future ready. So having companies adopt the ISO 2022 is sort of going to benefit them in the long run, especially when you see a lot of new technologies coming up on a day-to-day basis. So I would like to conclude by saying that, TMS is, or rather a treasury management system, is not just a luxury, but it's sort of a strategic necessity for all corporates. And it increases your efficiency, productivity of the team, and sort of positions the organization to be ready for the challenges that they might come across tomorrow or in the future.